Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh man, I don't have the music going. Hold on. So let's come over here. I forgot I had to restart my machine here this morning because somebody tried to log into it. There we go. All right, guys. Well, it is now the start of fall trading. I mean, I know it's not fall yet, but after Labor Day and after that first non-farms report, we tend to see slightly different liquidity. And you can definitely see that here this morning. Coming over here and looking at the DOM. Okay, yeah, it was normal to have 4 and 5s last week, but 6s? Is there a 7 on here? Not a 7 yet. That's pretty thick. It's pretty thick. There is an increase in liquidity, and I would say that there is an increase in activity as well. It is a Monday. I wouldn't expect there to be a whole lot of activity on a Monday, especially since we have inflation numbers this week. But they've traded an okay range so far, and there's actually been a decent amount of transactions going on. So I do think we are clearly out of the summer liquidity. That means trading is going to be different. There's going to be a lot more opportunities for us. And I think today, I don't see myself taking a trade, although you never know. But I do think we want to pay attention because we might get some hints as to what the market is thinking about the inflation numbers later this week. So let's come over to the charts, check things out. So, man, I mean, it was a pretty good run last week in the Treasuries, but that non-farms was pretty big. In fact, I think that we need to go over to a daily chart and kind of see where we're at, relatively speaking, right? This is the highest we've been since the huge spike in yield, or sorry, not yields, but in prices, when yields collapsed, when the tariffs were first put in place. And this does appear to be reflecting a anticipation of lower interest rates and rate cuts from the Federal Reserve. Over here in the S&P 500, well, that non-farms definitely hammered the equities down. So they are saying, okay, we're concerned about growth, but it's still not too bad. I mean, considering that was off of all-time highs, that's not too crazy, right? So I think we're moving along. The problem is that usually what happens is when they start to cut interest rates, it is at first a boost for the market, but before long, they start to realize that the growth is coming down, that we might have a recession, and equities start to fall off. And I think it's a very, very well within the parameters here to have a 20 to 30% pullback just based off of, valuations and things like that, because the market's maybe a little bit ahead of itself. So I don't know if that means I'm going to go short here, but just the range of possibilities. There's a lot of downside risk, okay? Oil also taking the hit. And this, on top of this, it sounds like OPEC is talking about more supply. So yeah, I don't think that oil is going to be going into that like 70, 80 price range for a while. Okay. You never know. Something crazy could happen. Gold. Look at gold. Gold is by far the best performer here, isn't it? Or is it silver? Oh, okay. Silver's not quite as good as gold, but it's still looking pretty good over there in silver. And copper? Well, there. I just can't help but laugh every time I see this chart, man. This is just the craziest chart. Okay, but Let's like zoom that out of it. Okay, there we go. All right. Well, we're down a little bit in copper, but it's still maybe forming a range. It's not really showing too much of a direction. And the Japanese yen. Japanese yen's looking okay too. We don't want the Japanese yen to be doing anything too crazy. So I'd say right now we're in a good spot with them. And the dollar a little weaker at 97. You know what though? Like again, this is one of the things that just really grinds my gears. Is people talk about, oh, the dollar is so low. We've lost like 10% of our value, and yet it was too high last year, guys. It was way too high. We are coming down to like that was like so high it was hurting the economy. High. And now we're back to like a more reasonable thing. Honestly, I think anything above 95 and I might even go as low as 90 is probably okay for us on the dollar. But right now, you know, within this, like, what is it? 97.5 to 98.5 is kind of the range over there. So. Well, we are seeing here in the Treasuries a decent amount of action from the open. You can see the down and the up. So I think that the robots, the algos, they're all playing there. I think that the larger I think that the larger trend is up, and I would be thinking about like momentum players buying treasuries. I think we're probably like they were already buying them. Are they going to continue to buy them here? Hold on, we can come over to this other screen. Well, I don't know about that, but the larger trend is up. So that's the first kind of major force that I think we need to consider. And then the next major force that we need to consider is the PPI, CPI later this week. Now, what I think it's tomorrow, right? Isn't it tomorrow that we get CPI? Let's see here. This week. Oh, no, it's Wednesday. Oh, and we get PPI first. PPI is on Wednesday. CPI is on Thursday. Okay, so can I point one thing out with the PPI, by the way? The median consensus expectation that I have here on forexfactory.com for PPI is spot 3, despite there being a spot 9 spike last month. So how can that be? How can that be? I mean, they missed it last month. Why wouldn't it be happening this month and have something like that again? I'm a little bit concerned that the expectation is spot 3. But if they come in line with that expectation, it's going to be really good for the market, right? Well, really good for the treasuries at least, because then that means that we are clear for rate cuts. So we got those things coming up. Also on my calendar here, well, hold on a second. That doesn't seem right to me. Let me refresh here, make sure that I've got it right. Okay, yeah, so it says at 9 o'clock we have the New York Fed inflation expectations. So normally inflation expectations is a poll that they do with consumer confidence, like the University of Michigan does. And that number has been showing like expectations of insane amounts of inflation, right? That has yet to come through. So that New York Fed inflation expectations number is much bigger. It's people are paying much more attention to it because the other number where they normally get that is kind of useless. So that one is a big deal too. Okay, so we got the larger trend up. We've got expectations of, possible inflation numbers later this week that could be bad. So I think that people will probably be hedging against that. That's probably a sell in the treasuries from that part. The inflation expectations, that I don't know if I could say that people would buy or sell that ahead of it, but that might suppress volatility a little bit. We also have Trump speaking at 8:10. I don't know about what, but it's here on the Financial Jews calendar. So, I think overall, my kind of judgment for what the flows are going to be today is a little bit mixed. A little bit mixed. But I think I would still be favoring the upside slightly. So, that doesn't mean that I won't take a trade, but I'm going to be a little bit more careful. And if I do get a trade, it's probably going to have to be a much more technical setup. Like, I really have to see some sort of really strong imbalance in the order flow itself. I will note that the 10-year has kind of been selling this morning. Like the overall balance of flow in the 10-year is selling. So that's not very in line with some upside. But it is in the 5-year. It is buying in the 5-year. So I think that the market might be saying, oh yes, we think that we're going to get rate cuts, but we also think that there's going to be inflation. So we are not going to, buy the longer end of the curve, and the longer end of the curve in this case is at the 10-year. Now I have to say, if the Federal Reserve really starts cutting interest, I mean, there is a situation where they cut 25, 50 basis points this next meeting, and then they do maybe once or twice more this year, and then they say, hey, this is good, everything's fine, and they stay there, right? And in that situation, that totally makes sense that the longer end of the curve wouldn't move as much. But we're going to have a recession. And honestly, I think that's a really big risk right now. I think that's a really big risk. Those longer rates are going to get pulled down too. Okay. That's kind of the thing with the TLT, by the way, right? Just you really only make money on the TLT. There's a recession. Okay, so I'm just noticing here that I have the wrong keys over here. So I'm going to go fix that. And also my feet are cold, so I'm going to put shoes on. And then we'll sit back down and lock in. Okay. So Uzi says, look who's back. Yeah. Well, I think at least for this week, we'll see how it goes. The kind of the conundrum that I'm fighting right now. So I want to spend more time writing my trading platform. It's slow going. I'm still in a lot of like proof of concepts and picking different technologies and things like that. I've been using Slint for the UI, and I'm pretty happy with that. But Slint doesn't have any facility for like a render surface. Oh, what language are you writing it in? I'm writing it in Rust, which is maybe that's my whole problem, is I just Rust is just not in the place to do it. But trying to use Rust. And I started doing the GUI in Iced. Iced was completely missing like certain types of components that were really important. Like I wanted to have file menus. Well, they have like a menu object sort of thing, but it's not in the main package. It's in like a supplementary package, and it's not like a file menu. So you can't really make what I wanted to do. Yeah, you can kind of have like a window with a menu at the top, but it's not like a native Windows file menu sort of a thing. So that kind of bothered me. I was like, maybe this one's not ready for prime time. So I've been using Slint And Slint is a lot better in that respect, and I've been able to get something that works pretty good on there. But the issue with Slint is now I want to go over to drawing the charts, and you want to do that with a render surface, something that allows me to use the video card for the drawing, and something that allows me to be like, okay, where is my mouse within this coordinate plane? And Slint doesn't have anything to do that. So I think I'm going to go and do the last option is, what is it called? Something GUI. That one has some other issues that I think might make it not as performant if we have a ton of things on the screen, like ton of controls. But maybe it won't be so much of a problem because most of the controls will be, just the grid with charts and stuff. So, man, what is it called? It's funny that I can't even remember the name of it now. Downtick there at 04.5 finally. Oh, we need to turn off the speaker. eGUI, that's what it's called, eGUI. eGUI is the next one to look at. So, we'll see. But I would like to spend more time on it, but the 90 minutes that I get here in the morning, I don't know if they're really enough to really make meaningful progress on that. And in the meantime, the stream does atrophy a little bit. It does, without the streaming, it does result in less revenue and traffic to the channel. So kind of thinking that it's better for me to keep streaming, really try and lock in with the trades. We've gone back and forth there at 14.5 now, by the way. And yeah, and do the programming in the evening. And I'm hoping that there's way more room for I'm hoping that there's a way more room for me to program in the evening, because Asher is not the maniac that he was 6 months ago. Like, he actually likes to just come into the office when I'm not here and just watch his iPad in the office because it's quiet, I guess. And that it has mood lighting, I guess. I don't know. But so I think that I have opportunity to, after eating, just come in and program. And might have more time then than in the morning. I'm new to trading. Is John Grady legit? I don't really know. I guess this is what my answer would be. Part of it depends on what is your definition of legit, right? My guess is that if he wasn't doing his webinar that he does 2 or 3 times a year, and he has like a little newsletter and everything, I bet that without those, that it would probably be difficult to sustain himself purely from the trading. But if we're talking legit, like, does he know what he's talking about? He definitely knows what he's talking about. And I think that his No BS day trading series, it's like one of the few like education platforms that I've done. It's only like $90 or something like that. Totally worth it. Totally worth it. Because it walks you through the game. What's actually going on with the depth of market. And so I found it really, really valuable and instructive. It goes through a lot of the like your setup and the business parts of it that frankly I kind of gloss over just because to me it's like a given. Like, okay, like you're coming in here, you have a broker and data platform and all that sort of stuff, right? So it's also really useful for that. But I just have to kind of slip that in there that most people have an expectation that they're going to become a trader and then it's going to make them a millionaire. And that is unlikely. I think one of the things that I like about John Grady is that he's upfront about that as well. That, yeah, you can make money from it. You can even make a living from it. But it's not the most amazing living. It's very, very tough. You're really fighting for scraps. Okay. I have other sources of income, so I can afford to do that even if I'm not making a ton from it. Although we've done pretty okay. Okay, now there has been a few contracts gone off at 15.5 now. There is maybe a tad bit of buying coming through. At least there was a little spike of buying there when we touched 15.5. So even though the larger trend with the order flow has been down so far this session. I guess another thing is that especially if you're doing treasuries, John Grady's really good to watch. Watch his free videos, get his basic course. I'd totally do it. Of course, I'm kind of teaching you similar things, and I'm going much further in terms of like what are the actual kinds of proven empirical patterns that you can see. Yeah, legit by his knowledge and his scalping method. I wouldn't think of it so much as a method. But trying to sort out here if something's going on in the yield curve. So earlier I was saying, you know, in the 10-year, the flow seems to be a sell. Actually, where's ZT? Let me pull ZT up. ZT is a sell as well. I don't know, man. So I am seeing the knob spread flatten a little bit. I'm not seeing huge moves in the other parts of the curve. And it looks like the 2 and the 10 years are both selling. And the 5 and the 30 are kind of mixed. The 5 is definitely buying. The 30 is a little bit mixed, but most recently has been a buy. And is up there actually kind of leading the way on the upside. So like, do you see how my 30-year is up 2 ticks and my 10-year is only up 1? I guess if we're talking about 1 tick, that's noise. The move in the knob is actually more like 1, 2, 4, 5, 6, 7 ticks. So I definitely detect something weird going on in the spreads, but I'm not sure what it is. You know what we need to do? We need to turn the robot on. Well, I'm seeing enough bite at 15.5 I think at some point we're pretty likely to see an uptick there, and we could see 16. As soon as I say that, it ticks down. Not a significant downtick, but so there it is. It's actually the bid came back really, really healthy on when it ticked back up there. I'm probably reading too much because as soon as I start saying something about it, I hear some clicks and it does a little bit of stuff. Maybe a little suspicious. Does look like my automated trading strategy would have gotten a trigger long. Okay, uptick again. So every time it ticks up there at 15, they're putting 2K up. Maybe I'm reading too much into that because we do have thicker liquidity, so maybe that's just the normal amount that we get now. But normally 2,000 would be pretty healthy. It's getting to the top of the hour, so I'm thinking about, you know, checking Zero Hedge, seeing if there's any interesting stories that are relevant to us. But I'm actually getting an Nginx 404 page on Zero Hedge right now. Okay. Oh, that's interesting. So just after it had gotten a long signal, which it didn't take because we had not started the algorithm early enough, is now getting a clear sell signal. Although that sell signal is going right into a iceberg at 14.5. It's not a huge, well, I mean, 4 to 5K is a pretty decently large iceberg. It's not like a monster iceberg, but I'd say it's a moderately, it's a significant enough iceberg in this situation. And yeah, so you're getting all that selling and it got held by the iceberg. So I'm not sure in this situation, I'm not sure what to make of that. There could be some situations, like especially if I was anticipating a strong uptrend, that iceberg holding it would be like a good sign that they're going to bust the highs, right? Similarly, if I was expecting some downside, I could read that even though there's an iceberg there, that there's 7K sell orders willing to sell it. Although I would say that the selling there was not, you know, I would really like it to see like a rush all in sort of a thing. And it wasn't like that. It did kind of happen over time. So that's not as good of a signal. So I'd say if I was looking for a short, it wouldn't be as good of an explanation for a short, but I could still use it to justify it for a short if I had information that suggested that the longer term flow was supposed to be short that day, right? But since I don't have such a strong bias, it's difficult for me to make a directional call off of that. But we can point out that it was a significant flow. And normally I would be like, well, that sort of thing happening there, that could be something that kind of pins us to this price, that makes it difficult for us to stay at this price. Problem with that one is we've been at this price for a while, haven't we? Well, another thing is that if we're going to have like a really strong trend or a really strong flow today, usually they would have already have chosen a direction and made it really clear what it's going to be doing. We're not getting that. So that kind of puts us in this weird place where like normally this would kind of make things sticky, but since we're kind of coming up on the tail end of a period where we've been stuck. That kind of means that if they decide to move, that could maybe actually make things accelerate whichever direction they decide to go. That's kind of adding a little bit of fuel to the fire on stops if they're able to break this teeny tiny range. Well, so I don't think that it's enough for me discretionarily to take the trade, but I guess the trade that the robot took is probably the side that I'd be leaning on, because we are up. So if we're not getting like a super clear trend, then we should see mean reversion. So mean reversion would be down, and the balance of the flow that we've been seeing in the 10-year in particular has been down. And the impulse that we just saw was down. I think I can wait if they do decide to bust it. Actually, let's just put it right here. If they do bust 16, I'll buy. Because I think that if they're going to touch 16, they're probably going to go a little bit through it. It is significant to note that we stopped one tick short of 16, and 16 tends to be a big round number where there's going to be a lot of stops and profit taking ahead of that. Profit taking ahead of that and stops after that. So I think that if we do come back up and that flow that went short comes back out, that could give us a little bump. Say there's a lot of options open interest at 16. I mean, that would make sense, but I don't know. In that one, what do you think, Octavius? Do you think that is like a significant aberration, or is that kind of more, that's what we should expect, and I don't think that we can really make too much of a read from it? So I'm kind of feeling that that's what I would expect. But you've been pretty good on those things. I'd be interested to know what you think. Or perhaps you're not sure, but we're just kind of reiterating what I was saying, that it was significant that we stopped one tick short of 16. Doesn't give us a trade here. But if we had been in a winning long trade, and then we got up to 15.5, I think that I would have taken my profits at 15. I would have seen there's just a trickle going into 15.5, and it's been a long time, and I would be getting out. Well, it's been about, oh no, that happened 3 minutes ago. I was going to say it was been about 5 minutes. maybe even 3 minutes is enough to say that there wasn't immediate follow through on that. So like the trade that the robot is taking, of course it's taking, we want to make some big changes to this, so I wouldn't read too much into it, but if I was trading it discretionarily and I was short, I think that I would be scratching it. I think I would be saying there wasn't follow through, so the signal's no good. Okay, that was a much stronger uptick. In fact, the bid at 15 was already larger than the offer at 15.5, almost immediately after the uptick. So that's unusual. And it wasn't because the offer at 15.5 pulled away either. The 30-year already broke its highs also. So does that mean we flattened out a little bit more again? Yeah, we did. We flattened out by about 2 or 3 ticks. So I wanted to lock in today. I feel like we're doing a pretty good job so far. There has been, I wouldn't say like there's been like a huge opportunity, like there's a big trade that we missed or anything like that, but there has been interesting order flow, and I'm glad that I've been sitting here really focused on it.
Order submitted.
So is it going to go long here now? Okay. Okay. So 1,000 contracts into 15.5 is a lot more than it was before. So that bodes well for us being able to clear 15.5. Okay, they're trying. Looks like there's a refreshing order there though. Probably they continue to hit through it, and they do eventually build a bid at 15.5. We'll see if it holds, pushes through the 16. Given the numbers that we've been seeing, I kind of feel like 300 is a little bit too conservative. But for the size on my stop. But let's just keep it and see what happens anyways. Okay, so there's a real build at 15.5. And some orders going off at 16. This doesn't mean that that's going to hold, but we did see what we're looking for there, right? We took a long NZB at 27. Well, that's not bad. And ZB is right there at that 17 evens, right? There's definitely something interesting going on here this morning with the spread between the 30 and the 10. Like the 30 and 10 is flattening pretty hard. The whole yield curve, actually, I would say is flattening. But, okay, there, just as I took my eye off of it to look at my spread chart, it looks like I did get triggered into the long at 16. I should note there was a decent amount of order flow at 16 on Friday. That was kind of the price that they kind of came back to and kind of balanced at before moving around a little bit more widely. So I would say also, you know, I'm kind of was taking it on the theory that maybe we could get some stops. Well, there was definitely some flow that came through there. I don't know if it was enough. There was enough iceberging and offers in there and everything that they caught it. But definitely 6,000 contracts long at 16 already. Pretty quick. I have to say, this has been pretty good for first day post summer, hasn't it? And it's been pretty good for a Monday. It hasn't necessarily been super directional. It's not like there was some huge trend or anything. But the amount of volume and activity and you know, number of ticks. So like if you were to open a one range chart, the number of bars that you would be pretty decent. I'd say I am pretty positive about how much opportunity there might be for us in the treasuries here in the fourth quarter of 2025. And then definitely for the first quarter of 2026. Oops. Okay, now there was a good strong uptick too. 26 right there on the bid behind it. Some orders hitting into 16.5 right away. Now almost 3,000 contracts. Come on, there you go. Now they're trying to clear 16.5. Very good. Okay, not a strong bid at 16.5, but we'll take it. You think that if the 5-year takes 317, we should get a bit of a push? Yeah, well, yeah, so there's There's 110 evens there. It's kind of interesting that all three... Well, I guess the 10-year is a little bit above its big number, but the 30-year at 117 and the 10-year at 110. Kind of interesting. So there's a little bit of revving there in the 10-year, but it's not really going. So just to say, they'll like stack enough so that it's over 3,000 and then back off it again. Kind of like on to see if that causes somebody to like, oh, I should buy here. Right? $46. That's strong. That's because the 5-year ticked up there. Interestingly enough, it's not resulting in buy orders at 17. So I'm a little bit concerned by that one. Well, I guess my theory was that we would see some stops here above 16. And I think that we did see some stops, but that was mostly all of the flow or back at 16. That doesn't mean that it's not going to go up further, but I think that if we get pulled up further, it's going to be coming from the other treasuries and not necessarily the 10-year. Another thing, though, is that we were about, let's see here, we went from negative 30,000 to negative 25,000. So there was about, wait, am I reading that right? 3745 2519. Oh, okay. So maybe a 10,000 contract decline the beginning of the session that is now unwinding. So you could argue, I wouldn't say that it's a super strong one, but I think that we could argue that there is trapped traders and more to come out long. Like, we got the stops at 16, at least the initial bit, but there's probably still some other guys trying to hang on for dear life. I don't know. 2 ticks would be just fine with me. But I think that I will have plenty of time to take it off at 17 if I want to. So I don't really have to move yet. And there usually is a little bit of movement around the S&P 500 open as well. Not that I'm reading anything too significant happening over in the S&P 500. It is slightly up. Yeah, patience. Yeah. See, now I could straight hit at 17, right? But it's almost already 3,000 contracts, so it kind of looks like the imbalance is still in favor of the longs. Granted that 47 at 17.5 ain't pulling away. Why 01? Okay, that was interesting. Did downtick for a second, but then it upticked. It was very strong, and now they're moving through again. They didn't clear it. They probably still have to trade 4,000 to 5,000 contracts to keep it bid at 17.5, but a lot of flow came out there. What's with 18.5? That's weird. It's a lot of orders, 5,800 orders at 18, but then at 18.5 there's only 45, so there's almost 1,000 less there at that price, and that's significantly less than anywhere else. Okay, it switched back. Somebody stuck something there. Something else I should point out. You notice back here, the prices from before we cleared 16. So 15 half, 15, 14 half, 14. They're all over 6,000, which is more than anything that you see on the offer. The only one that's over 6,000 is at 21. There's a 1,000 lot MBO at 21. Are you talking about in the 30 year? Oh, you know what? I might have things set up to be able to see that far in 30 year for some reason. Let's fix that. 32. No. Oh, you're talking about 21 in the 10 year. Yeah, okay. Yeah. So first of all, I think that if we're you know, oh, hold on. We gotta change it back to this. Okay. We didn't let me put a stop limit there. That's the wrong direction. So I'm not going to say that that's my target. I think there's a really good chance that I do take it off before then. But what I'm seeing in the book does kind of suggest to me that that might be, if we can clear this area, that's kind of be the next one, and that there might be some more significant resistance there. So, but what I'm seeing overall, oh, okay, hold on. There's actually a little bit of a decrease in the liquidity that we had below us now. So I don't think that that's a good sign. I don't know, guys. I think that what we saw there, 10,000 at 17, 8,000 at 17 half, was kind of it. That's probably causing another, well, I think I can still do that. But I think that that's causing another liquidity hole to form. You're long ZT at 156. Oh, that's really good. When did you hit into that? Was it like between 8:20 and 8:30? Right at the beginning of the session. The 10-year can't get a 1. Yeah. It's the issue I'm seeing right now is we did get a little bit of acceleration once we started touching 17 half, but not it was a lot of volume. And then after we saw a lot of volume, a little bit quieter, some of the big bids that we had below us disappeared. That kind of suggests to me that there was a big buyer coming in here pushing us up, but that okay, so they took me out at 17 half. Let's just note here. See if that was a bad call or not. But I'm concerned given my time constraints, because I think that if we were going to hold this till the end of the session, pretty good chance that it continues to just keep moving up, especially given this situation. Well, you know, it's interesting. Remember earlier I was saying I think that the balance of flows is in favor of the longs. But if I was just going purely off of the technicals, I would have gone short. And almost immediately then we got the counter signal long. And I just happened to say, well, I think that it's, if they clear this price, that'd be more significant. So I totally made the right call, even though my earlier analysis was totally off, right? But part of the thing in that earlier analysis also was, well, if we don't have a super strong imbalance, then we're more likely to mean revert. And we didn't mean revert. So to me, that we cleared it, that says to me at this point that we probably have some sort of a large meta order going on that is likely to be present all day. So that doesn't mean that it's going to be like this huge winner or anything like that. But I do think that if we were to have held it, like, I don't know about 17.5, but let's just say we still had our trade at 16. I held it. Probably it would go further throughout the day, you know, before the options pit close, let's say, right? I'm taking it off because I can see the amount of volume trading at 17.5, and I'm afraid that that's likely to become a hole. And since I only have 35 minutes, I'm not willing to wait that one out. Although I would also say it would be legitimate for me to still have it, right? So I took it off at 17.5. You know, I could be sitting there with it going, okay, well, give it the opportunity to go a little bit further. Take it off at 17.5 if I have to. Because 3,500 stacked at 17.5, that's not bad. They are nibbling at 18. Very tepid though. It's definitely, I don't think it's going to be as fast as it was through this area. Come on. Yeah. Okay, it was 828. Okay, cool. That's a pretty gutsy call, though, Uzi. That kind of sounds like you were really making a technical play based on... Because I feel like that the flow was very, very unclear at that point, yeah? Well, I don't know, maybe. You probably caught it when it started bouncing back up, huh? I don't know. That just seems like a really, really lucky play. What, like on the chart to have gotten that price? When I say lucky, I'm not trying to dismiss the accomplishment. What I mean is, like, the price that you got relative to the local low is really, really good. Right? And especially considering that in the 2-year in particular, which is what you're trading, the balance of the flows was all down, and it continued to be down through that whole range. Is... Man. No, that is... Yeah, every play is a lucky play. Like luck in this instance, let's not call it luck. Let's call it you got a really good price. Right? You got a really good price because you bought it in here. Well, okay, sorry, that's the 10-year. Let's show it on the one that he took it in, the 2-year. Okay. He took it right in here. And then almost immediately, and it was 157. So he took it here, and then he got plus 2 ticks. I guess over here you were probably sweating a little bit, but even then it was just like it came back to break even. And only briefly, but then along. But it's just like if you were looking at cumulative delta, would you have said go long here? I don't think you would have. So that's the other side of it. But then at that point, I have to wonder, was that because he was taking a technical play? In which case, then I kind of am like, well, maybe you got lucky. But maybe he thought, well, the news that we got on Friday was pretty significant, and I think that you're going to see some continued flows today. People that weren't able to adjust on Friday, and they still need to do it, and they're going to continue buying today. I think that would have been a legitimate. I mean, I think that's probably part of what we're seeing right now, right? You're gonna put it at what? Wow, yeah, sorry, I don't have a 2-year DOM up, but yeah, 167. Let's see. So we're still here at, like, if I hadn't taken my trade off, I would still have the opportunity to get out at where I got out. But I could have put it 1 tick higher and gotten that too. But my larger kind of pick here that, like, it's slowed down through this area has definitely happened. Build at 166. Okay. Wait, so does that mean that you mark it ordered out at 166? Yeah, you hit it. Okay. So now you're in the same boat that I am, right? Which is, if it goes higher in the next 30 minutes, we're both going to be like, "Gosh, dang it! Oh, why did I let Seth talk me out of that one?" I have to say, Uzi, I think the thing that actually would impress me about that trade the most, though, because again, he hasn't said why you took it, and to me, why you took it is a major part of the trade, right? But it went up, it came back, and you stuck with it. That's impressive. That took some tenacity. That was your plan? Okay. That's what stops her for you, Goofy. I guess. Honestly, if it was me in that trade, sent you the screenshot. Okay, we'll look at that in a second. If it was me in that trade, I would have gotten up into here and been like, "Oh, we're stuck in a liquidity hole." So I might have taken it off in here. And then if it came back down like that, I definitely would have taken it off. Seeing the continued selling, I would have been like, "Nah, something's wrong. Like, the flows are short and I got lucky," and I would have taken it off. The flows would have scared me out of it. Although, I shouldn't read too much into the flows in the 2-year. But I sent me a screenshot just to prove that you did. Oh yeah, I gotcha. Yeah. It's interesting that you're showing it on a 10-minute chart. I see. So was the impetus for the trade it coming back to this line? What is that line? That looks like some sort of a volatility projected range. Yep. I guessed right. It was a volatility projected range. Okay, but so I don't think that you could call it a purely technical trade, though, could you? Like, well, I don't know. You could say the trend is up, It's going to come struggle at that projected range, but since we came here, the trend is definitely up, so I want to take it there. That's probably like the purely technical way of playing it. Still 17.5. Okay. And are you calculating the projected range based on like average true range or based on the VIX? So that's the other, I think that there is definitely something to, or that there is some benefit, let's say, to volatility projected range, right? But what do you decide your measure of volatility is? And what do you decide is the, like the lines? So I think that he's saying
Order canceled.
Implied volatility of monthly options contracts. Okay, yeah, interesting that my robot just take a short there. So it did make money on that first trade, although not. Oh, actually it got a better price than I did. Okay. Anyways, so he's saying implied volatility of monthly options contracts. So not the VIX, but implied volatility. Okay. I think though you'd still have to say, because there's certainly going to be some cases. I guess if we canceled this out, right? There's certainly going to be some situations where it came up here and then it did that, right? That's the sort of thing that tends to happen. It is a little interesting that they did that. There's what do you mean by a relationship between the IV across treasuries? Okay, look at your 5-year. We're below 17.5 at the moment, by the way. Okay, sure. 2-year tends to be narrow. IV 5-year a little wider. 10-year really wide. 30 years stupid wide. Yes, true. But the volatility of the instrument tends to increase as the maturity date increases. So all-in was the first standard deviation of the projected range for the session. Sure, but don't you still run into, like, if you added the, so you took the, So if you took the implied volatility of all three of them, right, and you calculated the standard deviation for all of them, are you saying that they'll all kind of hit the similar place and turn around? And then another thing would be, how would you deal with it? Like, because volatility does tend to be less in the summer than in the fall, right? cross-referencing them keeps you from blindly taking trades based on lines. Sure. Now, the thing that matters to me more still is what was the original entry condition, right? Like, if it was just we had a pullback and the pullback went to that range and so I took it there, then I'm kind of like, I don't think that that's going to be reliable long term. But if it was, well, I think that they're going to be buying today. We did the analysis at the beginning, said that it's probably a buy. And so you said it's probably a buy, and there's been a pullback, good pullback to a good spot, so now I'm going to buy it. Then I like it more, right? So that the other question is, how are you getting that number into your NinjaTrader? Are you just manually setting it? You go on your other platform that you've got, you look at what the implied volatility is, and then you go and you insert it into your indicator. Which, I mean, would work, but would be kind of annoying to me. That sort of thing really bothers me. It should all be all automated. And I should be able to see it historically so that I can go back and back test and see how well it actually works. I log it in a spreadsheet and manually draw it out? Really? That's a lot of work. It takes like 5 minutes. Oh, that's a lot of work, man. 5 minutes. I like doing it. Oh, okay. Yeah, your screenshot was also from the start of the extended session. Yeah, it makes you feel more connected to the work. Okay. Did you, how long have you been doing that for? We probably shouldn't be talking about it so much because now everyone's going to start using that. It's going to stop working. Although when it comes to options, that's probably pretty big. Probably pretty big amount of flows based on that. So you can definitely make a good. Yeah, I'm pretty sure it's already used. Like it really sounds to me like something. Well, so we've always had volatility projected range. Like it's one of the indicators. It's one of the things that we've used, especially in S&P 500. Not as much in the Treasuries because I was never really able to find a way to automate it into my platform and everything. But I think it's something that we've always said is kind of base, right? But the particular measure that he's using and the particular, how he's drawing the lines with it being based on a standard deviation. Yeah, I don't think it's just something I should have been taking into consideration. Yeah. So what was the other information that you put into the trade though? It's really, I think it's important to tell people the other, because what happens is we talk about that one thing and then everybody thinks that that's the magic. And maybe that is the magic, but we don't really know. Might have just been lucky. We should think about everything that we were potentially even things that we may have unconsciously been factoring in. Because it kind of often turns out that it doesn't work unless you have all of those things, right? And that's what I'm trying to develop, because I mean, Uzi's been doing this for a while, so Uzi is a senior trader around here for sure, right? But for the new people, that's kind of the sort of thing I want them to think about to help their development, right? Okay. So he is saying it was mostly technical. 5-year buying, 5-year hitting, it's 1 standard deviation. Oh, now, so, but that is also interesting. Why did you value what the 5-year was doing over the other ones? And would you always do that? Because at the time, 10-year was selling. And it kept selling for another good 20 minutes after that. Actually, I think we could say good 30 minutes after that. Well, we lost 17. Man, I think we made a good call there, Uzi. I think we made a really good call there.
Order canceled.
Okay, so my robot is flipped around here. It is now long again. It didn't make anything on that last one. Okay, that's interesting. It depends on where each instrument is within its expected range. It tends to be stronger if they're all lined up. The 10 and the 30 were in no man's land, but the 5 was in a ripe spot. And remind me again, how do you get access to that data? That's like a different broker that you have, right? I'm kind of thinking... when you put it like that, then it turns into a technical trade that I can see how it could potentially predict order flow, right? If like we're up on the day, and all of them are up, but these ones are way up in its expected range relative to the other ones, then you would expect that one to catch up relative to its expected range. Oh, you get it off of bar chart. Oh, okay. But I would also say that in the current environment, I think that the 5-year is more influential. I think that well, the 2 and the 5. Right now, kind of what's going on is we're expecting rate cuts, but there's a lot of people that are still expecting inflation. And so the longer end of the curve isn't or let's say the rates on the longer end of the curve are not coming down as much. In other words, the yield curve is steepening. Buying continues. I expect the 30 to bust 117.60 and the 10 to push that 20-20 half. Well, I get the 20-20 half is correct for sure. Avia says I've been leaning on ZF as well. So I have been factoring in that the 5-year is more important in this, but I haven't been saying, if I look at cumulative delta, I care more about the cumulative delta in the 5-year than the other ones. I'm kind of more of a like, I want them all to be going up or all to be going down, you know, and in this situation they weren't, so that was maybe part of why I didn't take a trade.
Order canceled.
And I only took the one that I did based on expectation of a stop run. Now I guess you could say that the trade setup and the reasoning for that was totally legit as well on like a small technical play. And to make, what did we make? 3 ticks on it? Sounds about right for a play like that. The thing that sucks about drawing it manually is that when the contracts roll over, have to lose it all, the work on the previous content. Oh, okay. So question, going back to bar chart, do you have a paid account? Or is it a free account? Do I have a free account? Oh, here we go. Basic membership free. Bar charts plus. $10 a month. More access to tools, no ads, 10 watch lists, portfolio, and safe screeners. Okay, you have a free account. Comparison. Here we go. Market data APIs. Bar chart features a diverse set of market data APIs that can be easily integrated into your website, whether you're looking for a small, medium, large, or enterprise solution. We'll create a custom package for you that exceeds your expectations. Explore our market data APIs below. Connect for more information. Price data, cryptocurrency data, profiles and financial data, splits, dividends and earnings, leaderboards and lists, charts and analytics, ETFs, news and filings, metadata, other data. I'm having a little battle in my head right here while I'm reading this, because I really resonate with the sort of thing that Uzi was saying, that like looking at it and going and putting it in my spreadsheet and doing it manually and everything really makes me feel connected to the work. And I think that sort of a thing is really, really important. But I also just always try and automate everything, you know, like, and here I am trying to automate it. Okay, they came back up there really quick. That's interesting that my robot caught onto that so quickly. That is actually really weird. Do you see that right there on my market imbalance? I have never seen such an extended and hard reversal like that, where it was like in those few bars there was quite a bit of a sell, and then in this bar quite a bit of a buy. And that looks like manipulation to me. That seems like manipulation. I've never seen that before. You know how I learned that? When I worked for Publix, they made us print out our sections P&Ls from the computer and manually write them into sheets to give them to the store managers. I thought that was so dumb because we could just print it, but they wanted us connected to the activity for departments. Yeah. Gotcha. I guess the thing, the reason why I want to see if I can automate it is to see if there's historical data. Right. I guess if you have this spreadsheet, how far back does the spreadsheet go? So now I'm thinking, okay, let's just say that we had the historical data, then what would I backtest? Because what you explained makes complete sense, but I'm not sure that that's like a backtestable setup. You know, like the amount of times that happens is probably. Math is just to do the math on converting. Yeah. The piece of data that we need is the implied volatility, right? If you're recording the implied volatility, because my guess is, even though our bar chart has, so let's come back here to bar charts. So I want to keep my eye on this as we did come back up here to the 18.5. Barchart.com. So I think that you're looking at, you come in here to December and then you click on options, is my guess. Oh, that's interesting. So then which options do you look at? This one? Put call. Oh, I appreciate the link, but can you explain how to navigate to it? Oh, I see. So you come in here to 2-year note. No.
Order canceled.
Click 3 dots all the way to the right. Oh my gosh. Did it just go short again? Okay. Weird. CT links. Options quotes. Pick ZTZ, not ZTU. And then we probably have to change some stuff here, right? Oh, implied volatility 1.67. Okay. But that kind of brings us back to some of these other weird questions wherein we like way overanalyze it. So like, oops, here's September and here's December. Oh, okay. Doesn't have CTU anymore. Okay. And then if we go to the 10-year, options quotes, implied volatility is a lot more. Wow, 5.45. Okay. Not sure that makes sense to me. Come to the 30-year. Oops, wrong one. Wrong one. December. 11.12. Yeah, show me what it looks like plotted. You have the different implied volatilities and you plot them. So coming back to the data APIs. Get futures options end of day. Futures spreads. Oh my god. You're gonna end up talking to a vendor. Okay. Hold on. Fill out all of my private information on here. I need 15 words. Submit it. Okay. See what they can do for us. Okay. Oh, I see what you're... I thought you were going to send me a picture of the implied volatility for... Like, I thought you were going to show me a chart of just implied volatility. Anyways. Oh, and this is over multiple days. So what's the difference between the solid line and the dotted line? There's today. Looks like Friday really busted through though, right? Oh, you already told me? I didn't see that. I missed that comment. One is for the RTH and one is for the ETH. Okay. Gotcha. Interesting. Well, I'm going to close that because it's time for me to get going. But, well, it does look like, you remember I said, I think that we're going to be stuck in this area for a while, even though I think later in the day, there's a good chance that we go higher. And it looks like we did, right? Because now you're getting 18.5. So there's 2 more ticks. But it kind of went down and kind of almost tried to stop people out on the downside and tricked my algorithm a bunch of times first before it did it. So I think overall my calls today were correct, although I do think there was a little bit of luck in terms of which signal I decided to take. So we'll see. But tomorrow we get oh no. Tomorrow's probably going to be similar to today. So we can do that. Yeah, I'm gonna stream every day this week, and then on Friday we can reassess. If we're as productive as we are today, even if we hadn't talked about the volatility projected range stuff, I think they were pretty productive. One of the things that I want to focus on a little bit more is trying to do more development for you guys. So I'm kind of thinking about like maybe starting a program. Like it would be a free program, but it would be like a program where like you make commitments and stuff like that, so that we can kind of create like our own trading desk or something. So that's kind of the way I'm trying to take the live stream while I'm trying to build our own platform. Anyways, yeah, I'm way over. I will see you guys tomorrow, right? In the meantime, stay excellent, team.